Hello world, Colin here with another episode of Harness Money. Thank you for being here. Go ahead right now and tap that like button. And now let's discuss if you should invest in real estate or invest into the stock market to reach your financial goals. There's advantages and disadvantages to both methods of investment. I have tried to do both, and I definitely have my preferences, but I want to run down what are the advantages, disadvantages of investing into each type of investment, and then I will give you my thoughts about me personally, what I am personally doing with my money. Let's start with real estate. Real estate is a tangible asset that you can see, that you can buy, that you can touch and feel and make improvements to on your own. And it is one of the most prolific, if not the most prolific way that Americans and that people around the world build wealth, by investing into real estate and then letting it appreciate over time. Now, there is a couple thoughts that I have about actually investing into real estate. Generally, if you are buying a piece of real estate to invest, you want to make it a rental property. You want to get cash flow. Real estate is great for bringing in monthly cash flow. You buy a property, a commercial or residential, and then you rent it month to month. You get monthly payments from that real estate. So it's a great way for individuals to start bringing in cash every single month. Now, once you bought that property, you get property appreciation because real estate is a finite asset that is not going to be created more of, or that's the theory, that it will go up in value over time. That as neighborhoods get better, as people move into neighborhoods, and as they appreciate, you will see an increase in the value of your property. That's great. That's great for homeowners. That's why so many homeowners have become millionaires, is because they bought 20, 30 years ago and they sat on that property and it appreciated in value. The other item about investing into real estate is that there are a lot of tax deductions. Basically, when you invest into real estate, you're becoming a business and your asset is the property, is the real estate. So there are improvements that you will need to make over time. Maybe you need to do a new roof. Maybe you need to cut the grass. Maybe there's flooding that you have to take care of. Maybe it needs to be painted. There's all kinds of things that will happen to your property over time that need to be fixed, that you can deduct from your yearly income. And that becomes huge, especially as you get more real estate, especially as the real estate gets larger. If you buy a commercial building, there is a lot of maintenance that goes into that, and that can be deducted off of your taxes. Also, if you are an individual, you can use a loan. You can go to a bank and you can borrow money in order to buy a home. And then you can continue to do this. You can continue to go out and get more loans and buy more properties, because the more properties that you collect, the larger your loan potentially will be. So it's very easy for individuals, or I should say it's easier for individuals to get loans to buy property than it is to maybe go out and get a small business loan or to get money borrowed against your stock account. There's a very structured system that's been in place for decades, if not a century, about how to buy real estate, how to get a loan from a bank. And then it just becomes managing your cash flow and managing your debt. People get into trouble with real estate when they take on too much debt. They may buy too many properties that they really can't afford if there is a downturn, if people stop paying their rents, which happened in 2020. So you really have to be careful and watch how much debt do you have to the assets that you hold. It's a game of debt to equity that you really must balance. And then the final advantage that there is to owning real estate is that you can add value to that property. That you can buy a home and you can make improvements. You can flip the house. You can put in quartz countertops or granite countertops, or add marble to the bathroom, or really high-end finishes to the bathroom, or put tile throughout the house, put hardwood floors throughout the house that will increase the market value of that asset. You can physically do those things, which you can't in the stock market. If you invest into Walmart, you can't go to management and say, I really expect the business to do this. It's a lot harder to do that. You have to be playing on a very large scale in order to get a business to change the way a business is running or to add value yourself to that business. So those were all of the advantages of real estate. Now let's get into my favorite topic, which is stocks, investing into the stock market. When you buy shares of a business, you are buying ownership into that business, and those shares are very liquid. If you buy in smaller quantities, if you're not playing on an institution level like a Fidelity or a Vanguard or a Berkshire Hathaway, if you're just buying hundreds or thousands of shares, then it's very liquid. You can easily go on your phone or the computer and place an order to buy or sell your shares, and it happens very quickly versus real estate. You cannot do that with real estate. It's much harder to sell your real estate assets than it is to buy stocks. Stocks are very liquid. The other item is that stocks fluctuate in value. It's very volatile, but there's nothing that you have to do as a share owner to watch the value of your stocks increase. So if you buy into an ETF, just a complete stock market ETF, generally it goes up over time. If you hold for decades, it will increase on a yearly basis a certain percentage without you having to do anything. So you're getting that increase, and that's generally higher. The return of the stock market is generally higher than the return of real estate. Unless you're in a very hot real estate market, then stocks are generally going to go up faster than real estate. Real estate appreciates a little bit slower than businesses, and that's because businesses are really putting the pedal to the metal, trying to get that share price up, trying to add value to the market, bringing their goods to the market, and trying to sell more products and services to consumers. So stocks, you're getting capital gains, you're getting stock market gains. The other coin of stocks is dividends. Every quarter or monthly for some funds, these stocks pay dividends, and you don't have to do anything. You just buy shares, hold those shares, and you get paid for owning those shares. If you own qualified stock dividends, then you get paid every 3 months. Every single quarter, you will get paid a dividend, and it will be taxed at a lower rate than regular normal income that you get from working at a job. So you can get that cash flow without actually having to do any work, without having to maintain a property or to watch it, put effort into it. You just get those checks just for being an owner in that business. Now, the next advantage of stocks is margin. Now, with stocks, you can't get as much debt. You can't borrow as much against your stock account as you could on real estate. But if you go to the right provider, you can get a loan against your stock holdings, or you can use margin if your brokerage offers that. Now, margin is a loan against your investments that you hold, but it's based on a percentage. You can only borrow a certain percentage of your holdings. You can't borrow 100% of your stock holdings. So if you borrow, if you have $10,000 invested into the market, you may be able to borrow $5,000 against that portfolio, or you may be able to borrow $3,000, depending. It all depends on your brokerage provider, what their rules are on how much they will loan you against your stock account. But that money can be used for anything. It can be used to go buy more equities into the market, or it can be used as just a loan to go buy a car or go buy a house or go, invest in some other asset that you want to put your money into. So you can use debt in stocks, but you just can't use as much as you could in real estate. Real estate, you can borrow a lot more than you could by creating a stock portfolio. Now, the reason that I like the stock market is because you generally can get larger gains, larger stock market gains from investing in stocks than you can in real estate. Real estate, you can definitely get gains, but it's a little bit slower of a burn, the increases. And then with stocks, it can be very quick. You can sit flat, you can be flat in the market for a long time, but then it can ramp up and go to the moon, like Tesla or Bitcoin or all these other investments that increase dramatically very quickly if they are good assets that are well managed. So now let's get to which one do I prefer. Obviously, if you watch my channel, you know that I love stock investing. Stock investing is, for me, the way to go because you can do both. You can invest in real estate and you can invest in stock market and be successful at both. But I think that focusing your efforts is the way that you should go, that you should pick one or the other because I don't know, the more you focus on one specific thing, the better knowledge you have about that specific topic, in my opinion. So I know a lot more about stock investing than I do about real estate. And the other reason is that I don't want to manage real estate. I don't want to have to collect rents from tenants or deal with things like broken pipes or mowing lawns or taking care of all of the different aspects that go into managing a property. For me, stock investing is a lot easier. You just do it from your phone. You choose what investments you want. There's a wider array of choices versus I don't want to go bid against someone for a property and have to negotiate and really haggle for a specific property that I really want and really look into the market. And there's all these different pieces that go into real estate that make it a little bit more complicated, in my opinion, than stock investing. Stock investing, you decide what you want. You want to buy Bitcoin. It takes 5 minutes to go into your phone and buy more Bitcoin or buy into Tesla or Google. The other thing is it's liquid. So if I decide that I don't want to be an owner anymore of Google or Facebook's Meta or whatever it is, I can quickly sell out of that asset and invest into something else. I like to invest in growth stocks. Another reason that I like stock investing is because there's constantly new companies coming online, doing an IPO into the public markets that offer growth, that offer faster growth than some other older assets that are out there, even older stocks. I want access to those new fast growing investments. And so that is why I prefer stock investing over real estate. But I want to know what you think. Let me know in the comments if you invest into real estate or you invest into stocks. I know there have been many millionaires that have been made from real estate. So let me hear your comments down below, and remember to make good money choices. Till next time.